We are live. Wonderful. Awesome. Bill, such a pleasure. Thanks for taking the time. We're going to have a really fun talk here.
Thanks, Julian.
We're going to cover all kinds of things: crypto, internet times, bubbles, the future, tech innovation, what's Abra up to. But maybe let's start off with, for those few people who might not know who Bill is, what Abra is, what you guys are doing. Maybe let's start with this, build some foundation there, and then we dig a bit into the past, into a bit now, into the future.
Sure. So I'm Bill Barhydt. I'm the CEO and founder of Abra. Abra is a relatively popular global retail crypto wallet.
How many users do you guys have?
Hundreds of thousands. I don't think we've ever disclosed the exact number, but it's good. We actually have probably over 1 million wallets across hundreds of thousands of users, so it's pretty good. And we've processed, hundreds of millions of dollars in transactions. I'll give you the consumer-facing explanation, and I'll give the techies a little bit of gratification as well. So it's a very simple retail wallet for buying, selling, holding, exchanging any cryptocurrency. We support 25 cryptocurrencies today, with lots more coming. 50 fiat currencies, and you can exchange between all 75 currencies in real time. Very simple, kind of one button click to exchange between all the currencies. We have users in over 75 countries. We are processing at over $1 billion run rate now, which I will disclose. Yeah, we're getting good growth. So from a technology perspective, what we're doing is also really interesting. We use what we call a stablecoin model to create synthetic assets. You don't have to know any of this to use Abra, but if you're interested in the tech, it uses a very unique smart contract-based platform to give users investment exposure using this stablecoin-like model. And to my knowledge, Abra is the only consumer-facing application live on the planet doing any meaningful volume using this type of multi-sig smart contract. So the techies who are really into how Bitcoin blockchain tech works will find that fascinating. Our average consumer has no idea what I just said, and they don't have to know. So my background is in a combination of finance, internets, consumer internets, payments. Probably best known for some of the work I did at Netscape, 25 years ago. Did a lot of work in certificate authority design, early work on the SSL team at Netscape. A lot of original browser deployment work in the 1.0 kind of .com days, and I've done a lot of .com mobile payment work over the last 10 years in particular. So basically, I can say that I've been working in crypto for 30 years. Although in my day it wasn't cryptocurrencies, it was cryptography, and it's kind of morphed into cryptocurrencies. But now it's all caught up. It's all the same thing now. Yay! Finally, only took 30 years. So I love the idea of bringing cryptocurrency to the masses, and that's really what Abra's mission is all about. To make it accessible, easy to solve real life business problems. And I'll get into some of those in a bit, but that's our mission. It's real simple.
Cool.
And that's what I live and breathe.
When I got into crypto, I always associated Abra with remittance. Did I have a wrong feeling, or did this change a little bit, or what was the mission there? Or?
Yeah, I mean, money transfer in our mind is one of the key killer apps for crypto. That hasn't changed. I mean, the call sign is Abra, ABRA, a better remittance app. The idea was, yeah. So that was one of the ideas behind turning every phone into its own bank. Would enable not only the type of investing services that Abra does today, but money transfer. There's credit applications. We have a whole long-term, multi-year roadmap for the kind of services that we want to offer. It all starts by turning each phone into its own bank, so that you're the custodian of your funds using this really sophisticated tech, but in a very easy to use manner. And that's just one of the applications that this enables.
That's really cool. I didn't know that this was an acronym for something. I thought that was really awesome.
It doesn't have to be. I mean, a lot of people like the abracadabra connotation, which I love as well. So it's whatever you need it to be, I guess, right? We're flexible.
How was your maybe how was your kind of shift over from the internet times over into blockchain cryptocurrency? What was the ticking point? What kind of similarities do you see? Do you see any? Yeah.
Yeah. So I feel like I had to go through this kind of 20-year process of getting qualified to be able to do what I'm doing now. And the transition was really kind of pure internet browser-based services, which is pre-mobile, to I actually ran a gaming company that was doing games for feature phones. And we
Really?
had a very, yeah, I did. It was called Sonari, and Sonari was a fascinating company. And Abra would not exist had it not been for Sonari. Sonari had a really interesting wallet platform that allowed collections of games to share token assets. Now, obviously, this was almost about 12, 13 years ago. This was in the heyday of the flip phone, the feature phone, the candy bar phones. And we had games running in, I think, 25, 30 countries at the peak. We didn't make the transition to smartphones in enough time for this to work. And we got really caught in that iPhone Android transition. But the learnings for us were huge, right? We learned how wallet technology would work. It gave me a lot of insights into mobile banking. I did a ton of research in developing markets. And that kind of really made me passionate about bringing mobile technology for payments and other financial services to every corner of the world, which has morphed into what Abra is today. There was a lot of steps in between, a lot of research, and I'm somewhat of an expert now on the legal side of this. Unfortunately, I've had to learn all that stuff, which I didn't know anything about that in my gaming days, I knew a little bit about the commerce rules for exporting crypto because I had to know that in my Netscape days. But that wasn't really that relevant anymore because those rules are long gone. So yeah, it's been a long kind of uneven, unpaved road to get here. But I feel like I've made this transition from my quant background on Wall Street to understanding crypto and deploying kind of early stage internet systems for public-private key crypto, now to consumer internet and mobile banking, where Abra just brings it all together in like a really simple, easy to understand way. It's almost like the universe has caught up,
When I have to admit, right, when we met the very first time and we had a chat, I always was convinced that it doesn't exist that one person can combine product, marketing, financing in one person. Normally you have like a person who's really good in marketing, you have a person who's really good in product, you have a person who's really good with finance. Was this just my impression that you managed to put, as an entrepreneur, put all these things together? Well, what do you see as weaknesses? Where do you need people to help you? Or because like for me as an entrepreneur, I have my skills and I have my strengths, but I have so many weaknesses, right? So I need so many other people. But
first of all, I'm sitting in a huge office right now. It's quiet because it's end of day and it's Silicon Valley, and I sent people home because I wanted to use the backdrop for the call. But this is a 50-person office that I'm sitting in. So Abra is not Bill. Abra is a huge group of people that really know what they're doing. We have an awesome team. So I think in terms of my background, I've just been lucky that I've been able to work in finance at Goldman. I worked in crypto and Internet 1.0 at Netscape, and I built mobile wallet systems over the last 10 years, and I've been able to bring those together. But now what Abra has done transcends my abilities 100-fold, right? I mean, my head of engineering has run 1,500 person engineering teams. My CTO is an expert on how multi-sig crypto works, way beyond my knowledge of how this stuff works. My head of operations has by far the best CSR ratings in the crypto space. None of those things I could never do those things, right? And so we have built an amazing team. That's probably the thing I'm most proud of is a combination of the fact that we have hundreds of thousands of users now who buy into the vision, but we have, I think, the best team in crypto by far.
Yeah, I think the fun thing is always when you have people, a front man of a company, or like the face of a company, people always think, oh wow, this is a one-man show, there's no one else,
right?
And that's it. But the truth is like as different, as opposite as it could be.
It's unfortunate. I mean, I do enjoy going out to the shows and talking about crypto, evangelizing Abra, evangelizing where it's all going, evangelizing the idea of non-government issued money. But I love being here in Mountain View and working on product strategy with the team, and you know, just celebrating our wins and thinking about what's next. And unfortunately, I get to do both, but most of my team doesn't. But that's, you know, it's just the way it goes. Somebody's got to do it, right?
Yeah. What's the scene like at the moment in the Valley area in San Francisco? I mean, when I look into the news, so many outlets talk about, I don't know, Puerto Rico. They talk about Crypto Valley, Switzerland. I mean, obviously where we are in Singapore, it's always in the news. China.
Yeah.
It's so rare that you hear about the Valley. What is this rectified, or why is that, do you think?
Well, I think one of the great things, well, there's so much in your question. Let's try to unpack it a little bit. First of all, I'll say that, you know, people refer to the crypto space, and I'm using obviously air quotes if you're watching me, but the crypto space means a lot of different things depending on context, right? I work in kind of the traditional or traditional first generation of cryptocurrency space, right? It's literally using Bitcoin, Litecoin, soon Ether technology, and it's straight up cryptocurrency, kind of tried and true, that we've come to know over the last 10 years. But there's also the new ICO, initial coin offering aspect of the space. You know, these new kind of token offerings. There's the collectible offerings, both of which are largely driven by Ether. Then there's the new protocols. Obviously, EOS has been in the press a lot lately. And then there's the Wall Street aspect of the space, which is in the US, everybody's talking about when is the first ETF going to be approved? You know, when is institutional money on Wall Street going to start trickling into the space? So crypto means different things to different people. And then the second part to your question is, one of the things I love, and this was always a pet peeve of mine. You know, I lived in Europe for 6 years, and you know, went back and forth to Silicon Valley, and I always felt that people in Silicon Valley never understood that they were living in a bubble that most people just didn't relate to. And what's great about the crypto world is that it's everywhere, right? Most Americans that are into crypto don't realize that Coinbase isn't even a top 10 exchange, right? They think Coinbase is the biggest exchange in the world. Not only is it not the biggest exchange, it's not even close, right? But that's still a function of the bubble we live in, right? So I love that. I love that, you know, you've got exchanges in Asia that are huge, exchanges in Europe that are huge, exchanges in the US that are huge, wallet companies in every country. You know, we're a relatively big company now by crypto standards, and I still talk to players in Asia who didn't know Abra. It happens almost every day now, where I'm still introducing Abra to the first time. Maybe they've heard of it, but they're not sure what it is, even though, you know, we're one of the really established players in the space. And that's a function of the fact that this is not a Silicon Valley play anymore. It's a global play, and I love that.
Where do you see, I mean, I think always on the many things, also I think Singapore is a bit guilty of that, and I also think the Crypto Valley in Switzerland, I think there's so much hype and so much marketing, but true innovation is actually not always happening in these places. Where do you see true crypto blockchain innovation happening right now? Do you see this in the Valley? I have to admit, I mean, I'm there twice, 3 times a year. I'm never, you live there, right?
Yeah. Innovation is happening everywhere. You know, one of the great things about the crypto world is that it's really empowering the developer. It takes the open source movement that empowered the developer, and it's taking it to a whole other level. And I love that, right? And so I meet developers from, in the last few months, I've met developers who are in the Caribbean, who are in South America, in Mexico, in Africa. I was talking to somebody who's in Nigeria working on a really cool blockchain project last week. Obviously China, where you are in Southeast Asia. So it's a global phenomenon, but I love how empowering this has been to the developers, especially with some of these new protocols where, you know, the developers actually can raise money in a new way that they couldn't before. Now that's a very risky proposition, and I think a lot of that money is going to be lost, but the returns in the aggregate should be enormous, right? So it's a very special time in that regard, because I've always been about the developer, and to see the real protocol developers and the application developers rule the roost is really gratifying.
I can't remember who. There's a quote, and you might know who it's attributed to, but it went something like, if you want to know what the next hype thing is that you want to invest in, you want to look at what developers or your developers are playing with right now. And I still remember that when I had the very first developers in 2011, who were playing around with this weird thing called Bitcoin, right? And then suddenly you started this thing taking off. What do you see, and you being a developer yourself, what do you see right now that the developers are playing with in the blockchain crypto field that maybe, you know, the average person out there doesn't get, but this is going to be the next, like, this is going to be the hype thing that we don't foresee at the moment, but actually it's in the making?
Yep. Well, absolutely. I love that quote. And there, I actually know two versions of it. One is, if you want to see where the tech is going, look at what developers are working on. And if you want to see where you know the media world is going, look and see what's on your kids' smartphones. And so Snapchat would have been easy to predict, by the way, if you just had insight into teenagers' phones a few years ago. So in the developer side, though, we're seeing huge interest around dApps, decentralized application development, people playing with you know, next generation smart contract based applications for ERC20, which is the Ether standard for creating these new tokens for ICOs, but also now on the collectible side, right? CryptoKitties showed us what was possible, but this other standard called ERC721 allows you to create non-fungible crypto assets. Correct? Like, that's why they're called collectibles, because my baseball card may not be fungible with yours, whereas in an ERC20 token, which is like almost like a stock or a security, they're totally fungible like money. So I predict you're going to start to see a lot of developers take advantage of these new capabilities in a way that up to now hasn't been possible. And I also think it's going to drive a lot of the scalability discussions forward, like with Radon and Lightning on the Bitcoin side, both of which I'm super excited about. So I think it's a really good time to be thinking about smart contracts, Oracle functions, things like that. And I see a ton of developer interest in that. I follow, another example is this guy, Jimmy Song. If you don't follow Jimmy on Twitter and social media, he's awesome. And he does these developer classes where he travels the country in the US, and he works for Blockchain Capital now as a partner, but he's super technical. And you know, his classes sell out, and all these people are learning, you know, what it means to do multi-sig programming on Bitcoin or smart contract programming on Ether. And I love it. It's fantastic. And we need more developers who get that stuff.
I really liked Jimmy. I learned so much from him. I remember, I think I met him twice at conferences, had some great talks. Also some controversial stuff that I always didn't agree with. Sometimes in my sense, right, he's a bit too Bitcoin maximalist. Where do you stand in all this? And maybe also, how decentralized and what of a mix between centralization and decentralization do you think is okay? Especially with a lot of the newer platforms that try to replace Bitcoin, try to replace Ethereum, like offering this more efficiency, more scalability by being not as decentralized.
Yeah. Well, I mean, look, decentralization comes at a massive cost, right? Yeah. The holy grail of money was always money that could solve the double spend problem. And that is still the only known proven application of a blockchain. Everything else is, as far as I'm concerned, is a bunch of mumbo jumbo, right? We've never seen any startup, with no exceptions, say, I'm going to do XYZ with a blockchain and be able to solve real business problems that weren't solvable with a database. I'm not saying it's not going to happen. I'm just saying I haven't seen it yet. So if you put that aside, decentralization comes at a massive cost. Yeah. Right. I mean, the Bitcoin blockchain is the most inefficient transaction processing system ever created by man. And that's fine, because it wasn't created to be efficient. It was created to solve the double spend problem. Right. And it was counterintuitive, because it never occurred to anybody before Satoshi that it would take every computer in the world to solve the double spend problem, which is why no one had ever taken that approach. Right. So obviously that's intuitive when it comes to, or I would say orthogonal to what it means to scale, right? Because if it takes every computer in the world to have a decentralized system, how in the world are you going to scale it? Well, it turns out you can't. And so it gets you so far, and then you have to basically scale what we call off-chain, which is what we're trying to do with Lightning and Radon and other sharding and other solutions that try to move us forward to scale to the kind of consumer Visa-like numbers that everybody uses as kind of the gold standard when they talk about scaling. And that's fine for most small dollar applications. having to not trust someone is probably not that big of a deal. But having a digital gold or a smart contract, right, with a defined endpoint, probably a financial contract where you don't have to trust someone, is actually a really big deal. And so we can make that distinction now and have the best of both worlds. This is a multi-year thing that we're going to watch happen now when we go from this kind of first generation digital gold to the next generation of payments. But I think it's going to work, and I think it's going to work to the tune of Bitcoin probably being worth $1 trillion over the next few years.
I guess my question is also, how decentralized does the base layer have to be? Like Bitcoin being in theory completely decentralized, and some platforms, some coins having way more centralization where not everyone can take part of the consensus, only a small group takes part.
Yeah. Yeah.
That is also, I think, a follow-up question there I would have.
Yeah, I think that Satoshi even wrote about this in the very earliest days, when they were still mining on laptops, right? And the idea is that, look, in the early days, this is a test system. It's unstable, and by early days, I mean 10 years ago, right? It may have to be forked to fix bugs that are catastrophic failures, whatever. But over time, as more and more hash power or computational power comes into the system to mine Bitcoin, and more nodes are validating transactions, in theory, a 51% attack becomes completely cost prohibitive, right? And I think we're past that tipping point now, where even the United States would not be able to generate a 51% attack. One, everybody in the world would know that it was the United States because of the amount of computing power, or China. It would cost probably $100 billion and take massive amounts of manpower to get that done. And so that attack of taking over the mining and the validation via the nodes, that ship has sailed. It's not possible anymore, in my opinion, at least the way the software is currently written. Now, if we were to fork Bitcoin via some other means that could cause that to happen, that would be bad. But you'd have to get the miners and the nodes and the developers to agree, and that's not going to happen, right? The 2x debate proved that we're very unlikely to have a hard fork for Bitcoin anytime soon. And that's probably a good thing now, given everything else that's transpired. So I think that we already have proven that we have a decentralized digital gold in Bitcoin. I think Ether with proof of stake is going to play out differently. I think you're going to see Ether is going to adopt more of an internet-style architecture, because the internet itself is a network of networks, right? So I think you're going to see mini networks, and Vitalik has also talked about this, his vision for this, where you don't have to use the entire Ether network to run a dApp. You can basically run it in a mini system, and then have the broader network validate, the digital gold style contracts. We'll see how that plays out, but that makes sense for kind of the smart contract application currency versus the digital gold currency, where I would say that type of proof of stake, network of networks approach does not make sense. You need a global checkbook, to use an American analogy, for Bitcoin to work. You don't need a global checkbook for Ether to work in terms of validating the majority of smart contracts.
You mentioned ICOs. Obviously, we at 10x, we did one of the largest ICOs at all, which has advantages, has disadvantages, right? Sometimes I wish we never did one. Sometimes I'm so glad we did one, right? What is your opinion on ICOs? Why did Abra never do an ICO? Were you considering it? What is the thought there? I mean,
we raised venture capital a while ago, and I think for us, we've looked at a lot of different token models, meaning not just doing an ICO or a token sale, but also adding our own ERC20 token capabilities to the app, that where Abra would issue the token and not necessarily sell it, but even potentially give it away. So there's a lot of different perspectives we're considering. We've been so focused from a tech perspective in getting our kind of core platform to work and just being in business that we haven't really put a lot of time or thought into the ICO model. We had done a pretty good job of being correctly capitalized in the early days, but it is something now that I'm looking harder at to understand what our users want, how as Abra really becomes a leader in enabling the token economy, how this is all going to play out. I do think we'll make some announcements later this year about what we're going to do. I'll tell you straight up, I don't think I've figured it all out yet, at least for myself. But we're talking about it constantly, and not necessarily just the ICO, but the whole token economy, creating new custom assets, and what it all is going to mean. And I know it's a vague answer, but to be honest, we're still trying to figure all that out ourselves.
Yeah, no, I think everybody knows this for sure right now. No one, I think many people like try to wrap their head around. Doesn't matter if it's funds, if it's companies, if it's entrepreneurs. Yeah, and I guess there's so many questions still open on this entire story, right? Utility token versus security token. What's here to stay? I think a lot of interesting questions. You mentioned institutional money before, ETFs. I think just yesterday, like just kind of for those that watch maybe the replay, it's August 8th. I think yesterday was just the announcement that for another ETF that got declined in the US. What's your thought on this? Is the entire community too focused on this right now? Is this going to be an essential step? What does institutional money look like? We've heard this over and over again. Institutions are going to come. When are they coming? What is the call there?
So the ETF that I think you're referring to was the Winklevoss ETF, which was denied again. I think it was a modified application from the one that they had originally done. I think that we are going to see an ETF approved. I wouldn't be surprised if it's this year. We're already seeing simple index funds. Bitwise is live. Galaxy launched or announced their Bloomberg partnership. Bloomberg is managing that soup to nuts, which is good. Institutional validation. Sorry, I'm hearing myself. Okay, let me fix that. So I think that the ETF model does have legs, and I do think you're going to see an approved ETF probably this year, but certainly next year, if not this year. And I think that's one of the reasons why Bitcoin, which is likely to be the biggest asset of any ETF, is going to drive the Bitcoin price, right? So, but it may end up not being the Winklevi who get that approved first. I think their Gemini service is totally capable of running an ETF. I think they've built a great company there. I know dealing with the SEC is very complex, so I can't even begin to understand what they're going through to get that through. But somebody will. My guess is it'll be somebody with more gray hair than them, and which is unfortunate.
What do you think they would have to change, or what's the missing? I mean, it was so interesting. I think the commissioner of the SEC actually went out and she said that she disagrees with the actual decision of the SEC. And I thought I read through her response, and I thought it was very, very interesting. But so what would they need to change, or is there anything to change? Or is it just like keep hammering that rock until it breaks?
Yeah, so I actually agreed with her dissent for the most part. Like I said, I think Gemini, which is the Tyler and Cameron Winklevoss's company, is totally capable of running a Bitcoin ETF. I think that ultimately, unfortunately, it's going to take an existing broker dealer with the likes of a Goldman Sachs or a Morgan Stanley, or unfortunately somebody along those lines, or potentially a Fidelity or a Vanguard, to basically decide to get into this space and do it themselves. Or another company comes in that's raised billions of dollars and has that much money on the balance sheet that gives the SEC comfort that this is not their primary business and they've got so much cash that it doesn't matter. And I think that's ultimately, you can take all the hyperbole and all of the commentary and put it aside, and it probably comes down to the politics of that. Meaning, I don't have to be the one who puts a rubber stamp on something, which when it fails, the whole company is going to fail. And if Goldman launches a crypto ETF and it fails, Goldman continues to function. And the SEC
institutional
is not
money. What does that mean for institutional money?
Well, I think institutional money is going to come into crypto whether there's an ETF or not. I mean, to me, the ETF is a retail play, right? It may be a retail play for higher net worth investors at first, but it's still a retail play. The institutional money is a different issue, right? I think Galaxy with their index funds, which sits parallel to their hedge fund, could see a lot of money coming in. But I think institutional money is basically predicated on institutions being set up internally to be able to deal with crypto, right? I don't think that large institutions are going to outsource custody to the Coinbases of the world, right? They're delusional if they think that Goldman Sachs is going to give them keys to crypto.
That's really interesting. Honestly,
I think is
also work on a model, and we have been thinking a couple of times, should we offer that to other services? And we saw Coinbase come out. So you doubt that this is going to be an actual viable business model?
No, I think Coinbase can sell custody services to small companies, to larger merchants, but not to large institutional investors. Somebody like a Goldman or a Morgan Stanley or Citi or Chase, when they get into crypto, they're going to hire 15, 20 people in their IT teams to basically build a key escrow system that does for crypto treasury what they've been doing for equity and mortgage securities or whatever it is they're selling and trading for 50 years, right? They're all in the business of treasury. So extending that to key management, it's just a function of what they know. And I know that there's been all kinds of, well, are they legally allowed to do this and all this other stuff? And trust me, they will figure it out. And they will figure it out a lot faster than they'll be willing to trust somebody else to manage a few $1 billion worth of private keys. And that I'd make a cash bet on that one being true. I just don't see any scenario under which large institutions give up control of the keys.
Interesting. Yeah, you might be right on that. But interesting point.
The larger point being that if they're really going to go deep into this, they've got to have that infrastructure in place in order to start enabling the buy side. Because if they're going to manage custody for all of their high net worth clients, right, or via their investment banking divisions, they've got to have the custody services in place internally. They've got to have the mark-to-market system, the portfolio management systems, the trading systems. They're not equipped for that yet. So I promise you, they're all looking at it. I talked to them. I know they are. Some of them may start off with very simple OTC desks that service their own needs, but they're still going to manage custody through those desks.
Interesting. Hey, there's a chat question, and if it fits, I want to throw this in. And again, on all the chat questions, if it's something you don't want to answer, then you obviously have the right to not answer. But Matt asks, hey, Bill, when will Abra give more information regarding counterparty risk? Currently, users need to trust that synthetic contracts are properly hedged. In his opinion, that's not very trustless. What's your reply, or what can you share?
So I've actually disclosed all of the details on this many times, so I don't mind talking about it. If you go, I did a Litecoin AMA where I disclosed how the hedging works. I've written blog articles actually on, just go to abra.blog and you'll find blog articles on how this works. So the way the synthetic currency in Abra works, so let me back up for a second and explain to the non-techies the nature of the question. When you hold a dollar in an Abra wallet, you're actually holding Bitcoin whose value is pegged to the US dollar or the Singapore dollar or the euro or the Mexican peso or whatever currency you've chosen. It's a form of stablecoin. It's implemented using what are called Bitcoin multi-sig contracts. The consumer is one counterparty, Abra is the other counterparty, and an oracle, which is a neutral third party, defines the price of the underlying asset, meaning what is the value of Bitcoin versus the dollar. Abra is the counterparty to that transaction. However, Abra borrows Bitcoin dollar for every open position in every contract that we have in order to eliminate the counterparty risk in those transactions. And we don't take money in the system unless we can borrow Bitcoin to hedge away that risk. And we're one of the largest borrowers of Bitcoin in the world, to my knowledge. and we're quite good at it. We've processed hundreds of millions of dollars in transactions using this approach. We've never lost a penny, and we've never lost a penny of consumer funds. And unless Bitcoin has a catastrophic failure, it won't happen. So that's the quick answer. There's a long multi-hour whiteboard kind of session to explain the mechanics of all of that.
Abra.com/blog, right?
But if you go, or abra.blog, it'll forward you there as well. Or I think you can do a Google search for a Reddit. I think I did a Litecoin AMA maybe about 6 weeks ago where I went into this in detail. But there's other places where I've disclosed it as well. So we're very open about it. We want people we want the techies to understand how it works if they want to. But a lot of this is like understanding the mechanics of what happens when you swipe a credit card. The average consumer doesn't know what happens. They trust it, but for the technically inclined people, we're very happy to talk about it.
One thing, and I mean, I looked at your model and I found it really, really interesting. And in San Francisco, some time ago, we had a very extensive talk about it. One of the things that I always was interested in, what would happen if one coin, just one of the coins you're offering as a complete outlier, has 100% plus in a day, while all the others, including Bitcoin and Litecoin, stay stable? Would that not affect this individual contract of that one coin, since you're hedging it with something else?
No, so that's a really good example. I'll give you two examples to make the case. So when the price of Bitcoin collapsed in January, February, March, April of this year, anybody who was holding a dollar position, which again is based in Bitcoin, ended up with a lot more Bitcoin in the same wallet. Sure. Meaning if you had $1,000 and the price of Bitcoin fell, I had to give you more Bitcoin so that the value stayed $1,000. But Abra didn't lose any money when that happened, because the hedging system we put in place eliminated all of that counterparty risk to our contracts. So whether it's the Bitcoin falling versus the dollar, or Bitcoin falling versus the altcoin that you just mentioned, it's the same thing.
Understand.
Okay. So now the hedging system that we run in the background integrates with all of the crypto to crypto exchanges to find the best bid-ask spreads for us to hedge away that risk, so that we can maintain a reasonable margin on these positions. And like I said, we've disclosed how all this works. It's not. Are you
doing all the hedging yourself? Are you using exchanges for that? How do you run that?
So we borrow crypto, on the open market at reasonable rates, given that we've got a lot of experience in this. Then we sell that crypto in exchange for whatever's being hedged. So in your case, let's say it was altcoin X. If we were hedging Bitcoin against altcoin X, we would swap the Bitcoin for that position, and that would hedge away our counterparty risk in the smart contract that we had entered into. So the consumer has no counterparty exposure for Abra having any kind of catastrophic failure, or we're not exposing our balance sheets to the consumer in any way in those positions.
How do you select these coins? There's also a question from Rob who says, any plans to add additional coins? Obviously, 10x, always very interested. How could we get pay added there, or what would be what are the steps, or based on what selection do you?
The two questions are very related. So we run the hedging system acts as a quasi market making and liquidity management system. Our liquidity management system tests thousands of cryptocurrencies running on all of these exchanges that we're integrated with for market cap, spread, daily trading volume, and helps us determine what's liquid enough for us to include in our app so that we can hedge away the risk on those contracts that I just mentioned. Once a currency meets the criterion, then we analyze it further to see if it can really make the cut. And that's how we decide. Now, we've launched 25 so far. I will tell you there are more than 25 that make the cut, which should give you the second answer to your question about whether we'll be adding more. And the answer is yes, we'll be adding more. As a matter of fact, I've been reviewing in the last few days the list of coins that will likely make the cut for the next release, and we'll probably make the decision on that in the next couple of days, and then announce that in the next couple of weeks. So, and this will be a never-ending process. As other cryptocurrencies meet our liquidity target requirements, we'll be able to add them in pretty short order. The beauty of the smart contract model that I described is once a new currency makes the cut, we can add it to the app within days.
Very interesting. And then you balance them among each other as well, so that some things might actually cancel out, or some things kind of de-risk each other, or do you see every coin individually?
Every coin is individual, so it has to be liquid. It has to meet certain liquidity requirements, because if the consumer is a party to the contract and Abra is using exchanges to manage our own counterparty risk, and the liquidity of the coin goes to zero, I'm stuck holding the bag and I can't manage the counterparty risk anymore for that coin. So a baseline of liquidity has to be there for Abra to maintain consumer positions or enable consumer positions in those coins.
Very interesting. Let's change gears a bit, unless people have some questions. But one of the things that I am very passionate about beyond 10x is really to what I call make people crypto fit, right? On the one hand, this means to me understand blockchain, cryptocurrencies, help them to invest, obviously, but in a smart way. But then the other side of this is the entrepreneurial side, which I feel is really important, and I know it's really important to you. There was a very interesting TED talk from Jeff Bezos, I think it's like over 10 years ago, and he talked about comparing the internet to electricity and to gold, and shared how the internet is more like electricity and not as much like this gold hype. How do you see entrepreneurship today in the blockchain world? Where do you think stuff goes wrong? Where do you think stuff goes right? New aspiring entrepreneurs, what should they look up to, or what should be their motivation, their target?
I think there's some interesting parallels to what I went through in the 90s in the dot-com era and or the first dot-com era. I think that I see two different things, right? I see people who are passionate about products and solving real consumer problems or real business problems. And then I see people who are passionate about following the money. There's nothing wrong with making money. I like making money too. But if you're getting into this because your primary goal is to be a billionaire, you are going to fail, because you're never going to be in the right mindset to make the right decisions. And so it's just a function of experience. It's not like I had some deep, dark insight which says, hey, if your goal is to be a billionaire, it's just not going to work for you. I've just seen it time and time again where people have taken shortcuts, and I see it now in the ICO space where there's just too much crap. There's not enough people trying to solve real business problems that they can articulate, whether it's a consumer problem or a business problem. If you're passionate about solving a real problem, you're willing to do things that other people aren't willing to do. And that's probably your single biggest advantage is your willingness to put blinders on to solve that problem. And I don't think that's different in dot-com era or in healthcare systems or in blockchain. I think it's the same. What's different about the crypto world is there's all this fundraising stuff going on because of the ICO model for things that probably should be in academia as opposed to initial coin offerings that are getting thrown a lot of money at them, and investors are going to be very disappointed. Or I should say the investor left holding the bag is going to be disappointed because the initial investors were probably able to get out for a little bit of a pump and dump quickly. And that's not what entrepreneurialism should be about, right? It should be about following your passion to solve real problems.
Let's say someone else, and let's call him Joe. Joe would have done Abra and done all the stuff that you're doing right now. And you, with all the skills and all the knowledge you still have, like you would have this, you would see this entire environment, and it could be something that's non-blockchain, but what would probably strike your passion? What would be something, like I know for myself, the original case that got me into blockchain was medicine, which is my background. And so let's say 10x wouldn't exist today, but I would have all this knowledge. I would definitely do something in medicine with blockchain. What would strike your passion?
Well, I mean, I love financial inclusion, at least the way I define it. I love the idea of creating a banking system that billions of people have access to. You know, at Abra, we have poor farmers in the Philippines investing in crypto, and we have rich bankers in New York investing in crypto, all through the same application. That's never been possible before. I mean, I can't imagine another company has ever been able to say anything like that. And I'm super passionate about that. I'm passionate about education. I think that there's a big play in applying behavioral economics and some of this token economics to different education systems.
How would this look like?
I don't know. I'd love to be in a position at some point in my life to spend more time on it. But behavioral economics has always been a hobby of mine. I read a lot about it. It's guided my career over the last 10 years. And I would love to see it applied better towards some of the key kind of infrastructure issues we face on the planet, education being one, resource management being another. But there are other things, I'm so focused on.
Do you see problems out there that you wish someone would be solving because it would make everyone's life easier? And I'm not talking about like the large, big problems, like, like solving world hunger, but I'm really talking about problems, like that are here, there, that you are surprised no one else is solving right now, or maybe solving in a bad way. Because I always think a good business solves a real problem, right? So.
Are you speaking specific to the crypto kind of blockchain world, or are you speaking in more general terms?
Of course, it can be general, but I'd love to have it a bit more in the blockchain world, just because I think that's going to be the most interesting for people watching this.
So I actually am probably not in the mainstream kind of stream of thought on this topic. I actually think that blockchain outside of financial services is going to leave a dust bowl of catastrophes in its wake, because really? I really do. And I just, because again, it comes back to what we discussed, at the beginning of the conversation. The Bitcoin blockchain is a very inefficient transaction processing system. It enables internet scale decentralization. What business problems require internet scale decentralization? What business problems require the most inefficient transaction processing system ever created by man? Not many. It turns out that e-gold or digital gold and internet scale payments for digital gold is one of those applications, so that you don't have to trust the government or a bank. But most applications I see when people talk to me about blockchain, there's some things in energy that I've seen that, have the potential, because energy in some ways is like money, right? It's kind of, it can be fungible with money. That's interesting to me. IoT, doing large scale micro payments at scale is very interesting to me. But again, those are variations on money at the end of the day. So beyond that, I'm very bearish on the ability to apply decentralized, this type of decentralized technology. What about elections?
I mean, I challenge you on that I would say elections would benefit so much from a decentralized system. Well, because it's like one person trusting another party who has all the power in the world.
Here's the thing about elections. Elections is an example of a so-called identity management problem.
True.
The problem with identity on the internet is that no matter how you break it down, is if it's a human being, somebody has to establish that you're Julian and I'm Bill. Okay. As soon as you do that, whether you're doing it on a blockchain or in a database, you're trusting someone. So I liken it this way. Bitcoin is like the Matrix. You saw the movie The Matrix?
Sure. I think most
when you're inside the Matrix, the vast majority of what's going on in there, the people that are in there, they have no idea that they're in the Matrix. They don't know that the real world exists.
Yeah.
So to hack the Matrix, we put these hard lines into the Matrix, right?
Yep.
We use on-ramps for things like identity or stable coins like Tether as hard lines into the Matrix. But when you do that, you're trusting Tether and you're trusting the bank that holds the cash for Tether. When you do it for identity, you're trusting Civic or whoever actually acts as the on-ramp for your identity. So it's no longer by definition an internet scale decentralized system, because you had to trust someone to use it in the first place. Just, anyway, there's a million examples of that. But my point is that once you interoperate with the physical world, you're trusting someone. Like, to the questioner's point, you are trusting Abra as the counterparty to those contracts. That's simply the way it is. But Abra has figured out a clever way to use those contracts to take advantage of the decentralized nature of Bitcoin to create a trustless system. So we were able to create the best of both worlds. It's a very complex question.
The Neuralink, go Elon, right? I think once the Neuralink is up, I think that could, we would have a Matrix kind of style, and then I think this problem would get maybe solved.
Yeah. So there's two questions online that I'd like to address. I'll take the second one first. Somebody was asking if Abra has synthetic contracts for index funds. All I would say on that one is the answer is no, but stay tuned, wink, wink. So thinking, let me just address that at a higher level. So the stablecoin model that we use to represent either the other cryptos or the other fiat currencies are just simple examples of what our smart contracts can do. We can actually create stablecoin versions of any asset class in the world, including mashups of asset classes. We just haven't launched them yet. So I predict that Abra will be launching equities, commodities, bonds, all using Bitcoin as a synthetic asset class. My favorite example is you can have poor, workers in Africa who want to put $5 in Apple stock in the U.S. and they can actually do that using these multi-sig smart contracts now. So look for that, and I'm very bullish on that model for enabling global investing, and index fund / coin is a very good example of one of those. There was another question about whether or not we have an API for publishing trading data. And the answer is we don't. I would love to do that. To be honest with you, I don't have the resources to do it right now. Maybe somebody wants to come join us as an intern and figure out how to create some APIs for us.
How would they apply on Abra.com?
Just go to Abra.com or send me an email, bill@Abra. But we don't have the resources to do that right now. I'd love to do it. I have no problem exposing all of that. I can't even keep track myself half the time. Our business is moving so fast.
What about Rob's other question? Will Abra list non-ERC20 tokens?
Yes, so we will. We already do. Not all of our tokens are ERC20. We have Ripple, for example, is in the app. We have Monero. So we have non-ERC20 tokens today, but we're also going to support other token formats in the future. I mentioned 721, which is the collectible, non-fungible token format, best known for example being CryptoKitties. I'm very bullish on that model, and I think that's something that we're going to invest in a lot at Abra. But yes, we will constantly look at all of the new protocol tokens, all of the new Ether-based smart contract classes, and figure out what our users want, and other, like I said, other asset classes that take advantage of our smart contract model, like equities and other asset classes.
What about this question from Frederick, who talks about supply chains and tracking solutions through blockchain? Yay or nay?
Again, I hate to be the water on the simmering fire here, but let's break it down, right? I mean, if you have, so I've done work in enterprise software. Most people working in blockchain have actually not. So let's say you wanted to connect 100 companies to build a supply chain tracking solution. I would posit that it's probably cheaper, faster, and easier to implement by getting a MySQL-based solution and some publish subscribe system like a TIBCO, hook it all together, and run a completely mini decentralized system across all those companies using the publish subscribe JSON type of architecture, than it is to basically develop some blockchain-based solution that's going to require way more computational power and is not going to be truly decentralized anyway, because you're only talking about 100 companies, right? So it's an example of where I would question the value that a blockchain actually brings in that particular scenario, outside of the fact that it sounds cool because I said it's blockchain, right?
Yeah. There's a good friend of mine in Germany who's a bit more, he's quite famous there, and he always has in his tagline at the moment, SQL expert, and then he opens in brackets, which is more valuable than a blockchain expert, but I just want to state that or something. It's so hilarious when he puts in his tagline.
And I hate to say it, but for most business problems, your friend is probably correct. And it's sounds very German, but that's still true.
Yeah.
So.
How is your German actually? Because I know you have a lot of roots in there, right?
Yeah. So I lived in Germany for a few years. I haven't spoken it in a long time, but it was pretty fluent probably 15 years ago. But I'm a little out of practice now. So.
Oh, good. Yeah. Do you do you hire yourself for Abra, or do you have someone, or what's the plan there?
Well, each of my execs is responsible for their own, hiring for their own departments. We do have people that we use to source, but we do have a centralized system in the company for tracking candidates as well as feedback on interviews, because we do a lot of cross-functional hiring.
Do you know what you
I am
guys
hiring. We use Greenhouse.
Oh,
We use
really?
Greenhouse, which I love. Yeah, it's great. I am hiring a VP marketing right now. So anybody out there who's branding, messaging, expert and is excited about fintech and crypto, bill at Abra, please. Rewards for good leads.
I'll take the commission here.
All right, I'll pay it in Bitcoin, no problem.
What's your favorite hiring question, or what are your 2-3 favorite hiring questions? And if you have some other positions that you feel are worth mentioning, please mention. But what are a couple of your favorite hiring questions?
I love asking open-ended questions to people. I mean, obviously, especially with Greenhouse, it allows us to structure interviews to give people responsibility to dig in certain areas. But personally, the most fun for me is when I get to ask about your dream job and your dream scenario. If you could create your own job anywhere in the world, even if it wasn't Abra, what would you want to do? Would you want to go paint, or would you want to be a Java developer and core crypto developer? And what's your dream and why? And I love watching how people respond to that. Even if they weren't expecting it and don't have a good answer on the fly, I also enjoy the thought process, and it's a good way to get to know someone without leading them in a specific direction. So I guess it's a little bit of, I'm giving you some insight if you're one of the people watching, that if you ever interview for Abra, you're probably going to get that question from me anyway.
Yeah. No, because I do all the hiring at 10x. I mean, obviously we do very similar. We also have our VPs and managers who do like first line, but there's not one candidate I don't talk to. And so for me, it's always interesting what kind of questions do people ask. And I think that's always very interesting.
Do you have a favorite question, like a go-to for like open-ended or anything?
I love when people don't have 10x as like their only solution in life. Like, I think this is, what I love is when we hire people who would have 50 options out there, but they pick 10x because of whatever, right? Because they want to work in a great team, or they want to have a great culture, or, and so for me, it's always, I ask, for example, what grade would turn out if you didn't join 10x? Because I want to see if they actually have some other option, or if all they're thinking about is join 10x because I have nothing else. Desperation, I don't know, I always feel is a very bad guide. So I always want to understand what is their thought process.
And that's never the case in Silicon Valley, right? I mean, anybody here is good is got options, and so that's not a factor. Now, I will say that a big pet peeve for me is if I don't care whether you're here to sweep the floors or run marketing, if you haven't downloaded Abra and at least shown me what you like or don't like about it, or the fact that you're thinking about the product, that's not a good way to come in. Now, 18 months ago, when nobody had heard of Abra, or crypto wasn't easily available, I would say, okay, I could see that. But now it does happen where every once in a while I interview somebody and their credentials are fantastic, and have you played with the product? What do you think? No, I haven't really gotten to it yet. Well, why don't you come back to me when you've gotten to it, and we'll have another conversation, and that, so that may sound arrogant, but that is a big pet peeve of mine now. I feel like if you're coming in to a consumer internet company, that you should be playing with the consumer internet product and have decided whether it's a space that you want to be working in based to some degree on the product itself, right?
Completely agree. Yeah, totally. Hey, let's do one final question from Matt, and then let me ask you 2-3 really quick fire round questions at the end. But let's go through this question from Matt here. Abra seems to have found a regulatory sweet spot by using multi-sig non-custodial model. How do you think the regulatory climate will evolve to potentially address non-KYC AML platforms like Abra in the future?
So that's a tough question. Abra is,
I think, a very good one and a fair one.
It's an excellent question. Excellent question. Very fair question too. In terms of actually depositing crypto into the app and the core crypto wallet, Abra is a non-custodial platform. So we don't have to know who you are if you're just depositing crypto. However, if you use your bank account via our exchange partners to buy crypto into the app, then I do have to know who you are. and the app will ask you for an ID and things like that. But I'd say half of our business is people depositing crypto and half is people depositing fiat. So we actually do know about half of our users by name, and we validated their IDs, and that's just the way it is. If you want to use the traditional banking system in crypto, I have to know who you are. And if you don't, just deposit Bitcoin and you're good to go. I don't think that's going to change anytime soon. When I talk to the regulators, they recognize that if Abra is not holding the customer's keys, it's very difficult for them to regulate a consumer holding their own ones and zeros. I do think that most regulators get that. Not all, by the way, but most. And so I think that's a model which has legs. I think that this is where I think Switzerland and other jurisdictions that are neutral are interesting, because I think the Oracle business, which is going to be that kind of trusted third party for smart contracts, has yet to play out, right? And I think the next couple of years are going to be kind of the time of the Oracle, where you're going to start to see jurisdictions emerge, that aren't the U.S., where you can basically put a third key and have some, not guarantee, but semblance of a guarantee that there's no escheatment of funds if I get arrested, for example, or if somebody wants to steal my money. Anyway, but so I think that the model we're operating under has long legs. I'm not that worried about that. I think some of these custodial businesses are in for a lot of pain. A lot more regulation. They're still losing money. They're still getting hacked. People are still leaving large amounts of money on exchanges, which is insane. There's nothing wrong with using an exchange to trade. Yep. Do your trade, get your money offline, get your crypto offline, put it into Abra, put it into a hardware wallet if you don't want to use Abra, but don't leave large swaths of crypto online. It's just dumb. But people still do it, and they still lose the money. And don't use your mobile phone number for 2FA. Use Google Authenticator. And if the service doesn't use 2FA, don't use the service. It's just basic stuff that's just, but it's good. The reason this pisses me off is this is going to be the backdrop for more unnecessary regulation, because consumers are doing things to hurt themselves that are ultimately going to hurt the space, because the exchanges don't act responsibly, the consumers don't act responsibly, and then nobody wants to be responsible for their own actions. So then it all ends up in the regulator's lap, which they don't want either in a lot of cases, right? So
finishing this up, what do you think about regulation in general? Yay or nay for crypto? Do you think the regulator should just let the industry work itself out? Do you think we need to step in? What's your opinion on this?
I think that the direction things are going in is reasonable. I think if you're holding someone else's money, you're a bank in the traditional sense. I don't agree with most banking regulation, but at least if you're going to be consistent, right? And things seem to be moving in that direction. Let non-custodial wallets who don't touch consumers' money continue to operate as software companies. I think the most complex aspects of the regulation are probably around derivatives, smart contract-based derivatives, and how that's all going to play out. The CFTC in the US. CFTC regulations, which are for commodities and future contracts, those are in some cases 150-year-old rules that don't work well in a cryptocurrency world of smart contracts and CFDs in Europe that are easily enabled via smart contracts in the US, where CFDs are illegal. Nobody has thought through how to deal with that, in my opinion. But that's only one aspect of the regulation, and the things that most people see seem to be playing out in the right direction, in my opinion. I just hope that things don't get over-regulated, but so far it seems to be okay.
I agree. No, I think we're aligned on this. If you had to put all your money in one cryptocurrency, which one would you put it into? Or all your money Bitcoin. You want to? Okay, Bitcoin.
Bitcoin. That's an easy one. Yeah.
Why?
Yeah,
Bitcoin? Why no altcoin?
I believe Bitcoin is the digital gold, and therefore, as a stable store of value over time, it's going to win that application. We're bullish on multiple coins at scale because they'll solve different problems, for different types of payments, IoT, lending. security, like with some of the private coins, or some of those technologies may find their way into Bitcoin later. Ethereum for smart contract and distributed applications. But for the real digital gold store of value, I look to Bitcoin still. But I do own multiple currencies as an investment. Yeah.
Obviously, a lot of people interested in when do markets go up, what is needed. When I got into crypto 2014, I always felt this massive driver back then was actually Ethereum that kind of inspired a bit the entire crypto market. And then we had this huge bubble in the last 1-2 years, especially because of ICOs. At least that's my opinion. And now a bit like everything has flattened out. What do you see, or what do you think is going to be this next driver to cause the next kind of huge crypto drive? Or maybe I'm wrong and there's no more crypto drive, which again, I believe so. But what do you think is going to be this next driver that's actually going to like cause media to go haywire, and it's going to cause people to really see, oh wow, this is the next huge thing?
Yeah, I think Bitcoin is playing out the Austrian school playbook to the letter. I mean, the prediction is if you have a deflationary asset, it should be hoarded. And by and large, that's what's happening. I think a lot of the volatility is being caused by short-term speculators on top of the hoarding, right? Yeah. And there's a lot of nefarious stuff happening there where exchanges are enabling, schemes of large volumes of trades that aren't real trades, right? And so there's some of that happening, but by and large, it is playing out that Austrian school playbook, which says, hey, a deflationary asset will be hoarded. That will drive the price up dramatically. Eventually, the price gets to a point where people will be willing to loosen up their purse strings because they want to use their newfound wealth for other things. And we haven't entered that phase yet. And I think we're probably 3-4 years away from that. And Bitcoin could be worth a couple of $1 trillion by the time that happens. It could be worth less than what it's worth now, but it could easily be worth a couple of $1 trillion. If I had to make a bet, I would say it will be going up. I just don't see how you have a deflationary digital gold for the first time and then not have it be worth a lot of money. I just don't see how that's possible, unless there's a catastrophic failure with the technology, which I would also bet against. So I think that we're in the middle of that, what I keep calling it Austrian playbook, playing itself out.
Yeah.
And it is what it is. I mean,
do you think any like security tokens, or do you think it's just going to be people understanding the real value of the digital gold? Do you think there's going to be something, or do you think it's just too difficult to foresee?
I think they're bifurcated phenomenon. I think the fact that Bitcoin and Ether may have tracked each other at some point is actually in the midterm irrelevant. I think Bitcoin plays out like digital gold, as I just described. It gets hoarded, and then eventually people loosen up the purse strings when it's worth a couple of $1 trillion. And I think Ether becomes the platform for this new token economy, right? The new token economy is everything from enabling tokenized securities to enabling tokenized collectibles. I'm working on a project where you take physical collectibles and you tokenize them. Using ERC 721, and again, that whole token economy is perfect for the Ether model, or potentially the EOS model if the tech ends up working well there. And then in the kind of digital gold payments money realm, I see Bitcoin as the clear winner. So I don't know what the killer kind of token apps are going to be beyond securities and collectibles. To that part of your question. But the platform is so flexible that there are other types of financial assets that I predict will be created. If crypto kitties can capture our interest, I'm sure there's a million other things that can capture our interest as well.
Yeah, because I think the press, right? I mean, I think the mass is always wrong in general, right? That's why you have the masses not getting rich. It's only a few people. I think a lot of the press is so focused on security tokens, and you might be right that these collectibles could actually be the bigger player there.
I think the press is enamored with security tokens because tens of billions of dollars have been raised by ICOs from effectively a standstill 5 years ago. And so that.
Hey, I can't hear you, Bill. I think you're muted, or your audio went out. Now I can hear you. Yeah.
Can you hear me?
Yeah, I think your mic just switched or something. The sound.
Yeah.
The sound.
I think my hopefully you can hear me, but I think my AirPods died.
All good.
So all I was saying is that I think that, you know, raising money via ICOs, I mean, it's got its nuances, but at the end of the day, it's raising money. I think the fact that more people are able to participate is both a good thing and a bad thing, right? The average consumer is not a good angel investor. To be a good angel investor, you have to do probably 10 angel deals a year, and you have to hold long term. That's not what's happening in the ICO market. So I think that phenomenon will continue. I think that there are advantages to tokenizing those securities, but I don't think it's the killer app for the token economy. I think collectibles are a killer app for the token economy. I think Internet of Things is another potential killer app for the token economy. I think cross-border lending is also very interesting, but they're all variations on payments and financial services and things like that. So
very interesting. I highlighted that for myself, especially non-fungible tokens. It's something I always knew but never really focused on much. So very interesting. Cool. Awesome. Hey, Bill. At the end, where can people like connect with you, connect with Abra, stay up to date? Yeah.
So I'm on all social media. Bill Barhydt on Twitter. Bill Barhydt on Facebook. Abra Global on Twitter. Abra.com. There's links to everything. You know, the Abra blog. So we're really easy to find online.
I'll put all the handles in the YouTube description below. Perfect. Or if people are listening it to audio only on podcast, then we put it there. Cool. Okay. From my side, at the end, I can only say, hey, if you like this video, thumbs up. Share this video if you want people. I mean, I thought this was some really valuable stuff and some great insight into Abra, into crypto and entrepreneurship in general. So share this video. Subscribe to my channel, obviously, and click the little bell button. YouTube, for some weird reason, doesn't value subscription as much anymore as the little bell button. Yeah, click the bell button. With this, Bill, hey, from my side, I really want to thank you. People really got a lot of value nuggets here. Any final parting guidance or wisdom for people? I give you the last word here.
You know, you've just based on the questions, you've got a very knowledgeable audience here. So I'm super impressed with the questions. I really enjoyed the dialogue, and you know, I hope we can do it again in a few months, and
definitely
we'll be further along with some even cooler announcements. So I'd be happy to come back if you guys will have me and do it again.
Awesome. Thanks, man.
All right.